Well, guys, just when you thought 2025 couldn't get any weirder, it does. On, then off, then on again. Yes, the tariffs are now back on, at least for now, in the Court of Appeals. And as you guys can see here, the markets did not like it, rejecting big key levels and positive gamma flow zones. So what does this mean for us as investors and traders? Well, clearly we need to talk about the most traded zone on the S&P 500, these rejections and how they could be traded and played in the future, and the mass liquidation on the crypto market. Someone just lost $100 million, and I think we need to talk about it. Stocks, commodities, and cryptos, what's going on? Let's cover it all right now together. This one's not to be missed. We'll see you in a moment. Well, welcome back, everybody, to the Daily Show, where we talk about markets together on the daily. My name's Tom. Today, we're discussing the macro, the data, the key levels, and of course, the mass liquidations we just saw over the last 24 hours. While Nvidia did do as well as we expected, it should have done even better, but the markets were down off the tariff news of them coming back on. So what exactly is going on? Well, let's discuss firstly this Bitcoin liquidation. James Wynn over on X posting that he had a large position open, and he was looking at a 40 times leverage position on Bitcoin with a liquidation price of around 106,000. Now, as it turns out, the liquidation price changed, but according to Look On Chain, you can see here 104,000, the liquidations did occur and a mass sell across the board of that position, supposedly losing around $99.3 million on the trade. Yeah, it's a fairly large one, and a lot of people in the crypto markets do look to these types of positions as being potentially turning points. Particularly if you look at demand later on in today's video, we'll discuss the level that we found ourselves at Bitcoin. But what do you think about that? 40 times leverage. It's a lot of money, and that's why, especially in the crypto market, it can be over just like that if you get in on the wrong side. Let's talk about the economy at the moment. Now, we know that it's been pretty difficult to sell houses in the US recently, and it's getting harder. Take a look here at the spike up in 2025 when it comes to what's going on here in sellers. Now, particularly Texas and, of course, the Florida area seems to have the bulk majority of people selling houses. But boy, oh boy, are there big differentials here. One of the largest that we've seen in a very long time, according to the latest Redfin data. Could this be a sign of the times, and also more importantly, the sign of people over leveraging? Why I say this? Well, even recently, we've been talking in our community, our private community, links in the description down below, about some of the very low deposits that you need to put on houses. In fact, there are now 0% down deposits that you can do. And if that sounds familiar, that's because the last time you saw something like this was around 2006 in America, and we're getting closer to these types of things here, even in Australia, where I'm from. So 500,000 more sellers than buyers. That, of course, is a supply-demand problem, and whenever you have something like that in the stock market, generally speaking, prices tend to go lower over time. Now, let's take a look at trade routes. Now, of course, we're told at the moment by everybody that everything is shocking and there are no movements coming out of Shanghai to America. Well, according to the latest data here, yes, things are still moving. And of course, there is demand. Even with the tariffs being reduced, they were off and now, of course, they're back on. But even with them being at around 30%, you can see here, it does seem like markets are still showing that Shanghai to Los Angeles is starting to pick up. And of course, we're starting to see movements to New York as well from the Chinese markets. So something is happening there, people are importing, and it is continuing to, move around. As we know, tariffs tend to take their hold on the economies months and months, if not even a year later, in terms of actually showing up as a problem. So where are we at with this tariff discussion? Well, it just keeps getting weirder. Of course, we just saw that there was a movement towards saying the tariffs are off, and that was effective immediately. Then we saw an appeal, and that appeal has already gone through. And you can see here, at least at this point, it looks like the tariffs are back on for now. And I expect this to be an evolving situation over the next couple of days, as I'm sure we will. But I think the end case scenario is, according to at least my limited knowledge here, and I'm sure some of you guys in the community, and I have asked a few people about this as well, that generally speaking, there are other ways of getting the tariffs done and put on. So, there are clearly ways, and we have to basically consider that the way it sits right now is probably going to be the way that it does end. Will that be absolute? We don't know yet, but at least based on the evidence that we have so far, that's what we're kind of looking at. And the market didn't like it. Now, of course, the market, what has it done? It's sold off a little bit during that session. Didn't manage to close above the key QQQ levels, that's the NASDAQ levels that we were looking for to be able to get that rally to an all-time high. Now, let's talk about the two scenarios that we've got playing out right now. We've got, of course, the reformer presidents and what ends up happening here in terms of 200 to 250 days. Definitely a chart that you should be watching, where markets rally up and then don't do so well afterwards. And then, of course, we've got the other main kind of catalyst, which is the 1990s or 1960s period, which basically states that we're either in these types of locations right now. Now, which one is it exactly? I would argue that it could be actually more of this one up here, where we get an all-time high, but things don't turn so well later. But at this stage, what we did know was that markets were likely to rebound off this tariff sell. And the reason why this happens is because inherently the US market is really strong. Earnings season's just happened. It's really good. Forward guidance, okay, it's getting a little bit worse. But I think we've all got to agree with one thing, and that is that the US economy is not as strong right now as it was in January of this year or February or whatever time period you want to go back to. So clearly we are now running on the idea of tax cuts, deregulation, and QE stimulus from the Fed ultimately. And remember, these are still tools that are in this market, along with all of the breadth thrusts that we've seen in recent times. Now, latest data coming in here from Subu Trade, as you can see, when we've had such an epic run that we've just had, what tends to occur? Well, as you can see here, S&P 500 after up more than 18% over the past 35 trading days. What tends to happen? Sometimes a little bit of pullbacks, but in general, still a very bullish overall sentiment. So at the moment, we have to expect that dips are still going to be purchased up. And in terms of the maximum loss over the different periods that this triggered, you can see here that in terms of the max losses, they weren't that bad, except for one, which it stays notable, which is 2002, which ended up being around 14.16%. So we've got to look at the demands on the charts and the put walls in particular as they start to appear as potentially buy zones, at least for day trading, position basing, or even swing. Let's now take a look at the largest trades. Now, we didn't get really any mass transactions over the last 24 hours, but we did see the largest transaction ever recorded on TSM. This is a semiconductor just before the NVIDIA earnings. Obviously, TSM was up and so was NVIDIA. So both of them did end up rallying, but these sometimes are inflection points. So it'll be very interesting to watch this. We've obviously used these down near the lows back in March and April to show us that buyers were probably coming in. And we also know that there was a massive sweep on the mags, which again, a sweep tends to mean something quick is going to happen. Was it that we saw the tariffs come off? Was that what they were looking at, or is it something else? I think we need even more information coming through, because at the moment, again, we have rejections across the board on the major indices. And if these prices aren't able to be broken up on, we are going to have some problems with maybe getting a little bit more of a pullback. And I'm sure some of you will welcome this. 5,600, 5,660 would still be a great level to see on the S&P 500. Let's talk Bitcoin here for a moment. As we know, options, massive amount of calls open. We saw speculation. We can see that with that $100 million that just got liquidated. And whenever you get to these types of really extreme options levels in the past, as you can see, it can be temporary highs. So Bitcoin dropped about 5K, or actually not even 5K, about 3K over the last 24 hours. But it's probably in a stabilization zone as other alts start to rise up. As you know, oftentimes when you get into this period, the alts start to fire around these areas. But a massive amount of options interest, and obviously Bitcoin was rising up. And it makes sense. You know, we saw gold start to weaken. When gold weakened in the way that it did, as we mentioned on the show, we believed that Bitcoin would be a rally and potentially silver would be a rally. And so far, Bitcoin has definitely been the best one of those. And silver, still getting very, very close. But just remember, generally speaking, people are stacking alt assets. People are getting concerned of geopolitical tensions, rightfully so, as I'm sure many of you guys are. And that's been one of our main drivers towards these kind of, trifecta style positions, the gold position, the Bitcoin position, and the silver position, because all of those are currencies in essence, and they're all stores of potential value against fiat or against geopolitical tensions. And we can see here that central banks have been buying out of control over the last couple of years in gold bullion. They've also been buying silver. And as we mentioned over the weekend video, silver started to see CTA momentum. So basically, momentum-based strategies have been coming in across the board. Let's do a central bank liquidity check. Central bank liquidity on the uptick a little bit over the last 24 hours. Remember, that does not instantly bang straight into the markets. But we did see a Q1 improvement. Q2's been, I would say, lackluster in terms of liquidity. And that can also bode very poorly for Q3 if we don't see a big turnaround. So it takes sometimes, a couple of months to play out. And we continue to watch this story. The biggest liquidity right now coming into the market is from the PBOC. So China is basically, they're injecting more than anyone else. Now let's take a look at the S&P 500. It was up and then it was down. It was actually up at 6,000 in the futures, as you'll see in a moment, the most traded zone. Then it rejected that and ended up closing back down underneath this previous high. Now, we've talked about this being a resistance zone, the cluster on the Qs. Let's actually have a look at the Qs before we go over. And I just want to do this here because it's very important to show this zone that we continue to see strange reactions at. So have a look here. We actually opened above. Now, if we'd closed above, that would have sequenced usually a movement to the next level. And that could still happen. A movement up to the 540 zone here on the Qs. Positive gamma taking, overall, which is, of course, the options flow. And in general, we get through the clusters. Now, we did get through the clusters on the futures market, but what these clusters were in our previous videos was we had all these dark pool and all these like weird algorithmic trades all at the same level. And again, we've rejected back underneath that as we've seen tariffs take hold once again. Although that could be temporary, I think it's probably back. And this is leading into rejections across the board. So whether you're looking at the US 500 rejection here off the most traded zone, or you're looking at the NASDAQ, which is also rejected off these highs, these are now candles that we can lock in with some very good information. First up, of course, it looks terrible. When you see these types of rejections, you think, wow, big flow. You think new lows forming off these generally will then lead on to further selling, and that could force us into a 5,600, 5,660 as we continue to see these court battles kind of play out. And uncertainty, of course, is one of the killers in markets. But I think one thing you've got to take from this is semiconductors are doing well. They're doing well. I mean, the earnings are looking good. The forward guidance is looking pretty damn good. And whenever we see semiconductors improve, which of course we've seen recently, you've got to look at it as dips generally will be bought by the street, because the street is basically always hunting for that growth component. And the backbone of the US economy has been, generally speaking, the technology sector and semiconductors. Now, if we actually manage to close above this level, that is likely going to create a squeeze to all-time highs. And the reason is there's now going to be a lot of shorts above here. So we saw the same thing happen with the Qs. The Qs had the cluster, then it shorted back below them. I'm just going to show you here the NASDAQ so you guys can see it. And here's the rejection here from the NASDAQ. Take a look at this. So it comes up and it hits into this level of the dark pool clusters. It goes higher, pushes high in the post-market. So this is the aftermarket. And then by the time we get the open, we reject and we end up creating a shooting star candle. Now, every single technical analyst, you guys all know that's technically a rejection candle. But what you might not be aware of is a shooting star or hammer. They're only just barely statistically relevant towards the direction they're going in. What I tend to find them to be really good for is if markets actually bust through above them and then start squeezing, because we can always guess that retail traders love this candle. Hands up in the comments down below if pin bars or shooting stars or whatever you want to call them was one of your favorite first trading strategies. I'm going to guess most of you it is, because it's such a beautiful visualization of a rejection. And of course, it shows that there's some ferocity towards the downside. So it's a very interesting candle. It's happening at a very interesting zone. And it is tough out there right now because we are getting flip-flops. We are getting on again, off again, on again, off again. I mean, it's kind of almost annoying, yeah? Because what happens is that hurts the overall technicals that we can use in the markets. Just a few days ago, we were potentially going to move below the daily 20 down into the 20,000. And of course, we instantly see tariff reductions and pauses and stuff like that. So yeah, these are the things that are going on right now. But let's take a look at the options market. First up, let's have a look at the S&P 500 here. And you guys can note that 5,900 is now the put wall that we are finding ourselves in at the time of this recording. A put wall here for the 30th of May, a call wall at 6,000. So we basically have a 100-point kind of movement that can happen throughout the rest of the session. And if we go through the put wall, then of course we can go into negative gamma again. And if we go through the call wall, then we go into positive gamma again. At the moment, we are stuck in catch 22. The weekly close is probably going to be very important this week. Do we see these rejections hold, or do we see the market go back into being bullish? And you'll notice that when you go back into the June periods here, or you look into the future, what you're going to be seeing a lot of is calls everywhere. So clearly the market is very, very bullish. And you can see that the way that, or at least, the market participants are very bullish, because you can see that in stocks like Tesla, which continue to have this mass positive gamma effect, although it hasn't been squeezing megally since that, but 400 is still the target there in terms of the upside. And you can see it in Nvidia with this 140, which we're trading just underneath as of the close of the previous session. Another massive options expiration level and massive call wall. So we've got calls everywhere. We've got rejections on the S&P and NASDAQ. We've seen, of course, tariffs on, off, on again, and the markets hate uncertainty. So if there's going to be a reason, this could be a good excuse, but we just don't have the evidence of selling yet that's really aggressive. Or even if you don't want to sell, why wouldn't you then instead just say, well, I've got levels that I'm interested in, because at least semiconductors, the backbone of the current market plus the thrusts, are looking good. So if markets come back down, maybe there's going to be some good levels. So make sure to track us as we're covering this with you guys together very, very soon. Well, guys, I'm sure we can all agree that 2025 has been the year of the aftermarket, but the problem with that is sometimes risk mitigation. Well, that's where today's sponsor comes in, Tiger Brokers, and their new deals on options contracts. If you're somebody from overseas, such as Australia, and you're looking at potentially taking advantage of the aftermarkets and being involved, but not necessarily taking as much risk, then this may be the option for you. And as you guys can see, there is a current promotion offered for FX Evolution community members in the description and clicked link down below, where you're getting a whole bunch of very, very well priced trades, even if you're somebody that does a whole bunch of bulking. So what are you waiting for? Check out Tiger Brokers. They're offering some special stuff down below for you guys. And as always, they're improving their platform, and they've got a great mobile platform. And of course, they're constantly listening to feedback. And I always give that a massive tick of approval whenever I'm looking for my next broker. What are you waiting for? Check them out in the links in the description down below. So let's jump back into the charts here and take a look at the key levels that we're watching right now. And the volatility markets, of course, did spike up a little bit over the last 24 hours as we saw tariffs come back on. The main things to look at, though, were whether the bonds market started to freak out again. And we don't have that updated information just yet, but it will be coming in our weekend video. And yields actually continued to come down. So the US 30Y is no longer at least the problem for now with these tariffs on, off, and on again. On top of this, the US dollar tanked back down underneath some of the levels and has come back to a level of support where some buyers are going to be interested. And if you were a buyer of the dollar, this is going to be a very key zone to be watching. Of course, we are negative on the dollar this year, have been all year. But at the same time, I can make a case for a bull trying to get involved at these levels. And if the markets manage to break below the 98.50, I think the bears have got full control. And at that point, we could be going down into the 95s. If you actually look back in history, there's really no demand until those 95s. So that could be a huge move coming up in the currency markets. And we certainly will be watching that one closely. Now, with the dollar going down, that pressured up gold, and gold moved to the resistance zone here, which is a big closure point. Unable to get through just yet, but certainly a key zone to watch. And it rejected in many ways what has been that head and shoulders that is going against the overall trend. Remember, the overall trend is bullish on the monthly and the weeklies. This is a Bit of a short here that came in. Obviously, people are going to be targeting 3,200, 3,210. But at this stage, it is playing with the possibility of still continuing to rally. And I guess we are more on the bull side than the bear side for gold and silver. Silver continues to struggle as it coils around here, just waiting for that 33.60 plus break. That's going to be a huge zone. 34.50 as well. Really excited for those zones if we can get them in the future. And remember, the longer something coils, when it breaks out, tends to be quite an aggressive movement. Tesla, yeah, still in positive gamma, still above 350. Didn't really hold super well over the last 24 hours as we saw markets reject across the board, but it still is in an upward trend. The only thing I'd say about this Tesla move is it's a little bit different to the other one, as in more people are seeing it. I'm definitely noticing a lot more Tesla bulls out there. And whenever you get more Tesla bulls and it becomes more obvious, you've always got to say, do you still have edge in these markets? Nvidia closed up 3.25, but as you guys know, at one point it was up about 6.48. It was a pretty good earnings result. And really, I think this just details what we've been talking about recently, which is that semiconductors are still the leaders of this market. Now, they haven't been maybe for the last week, but in general, these have been the areas or the area that's done the best over the recovery so far. And that's what you want to see if you're going to continue to get bulls buying back into dips. So obviously semiconductors versus SPY, this is a great combo to have on your charts and something to watch. Now I thought I'd just quickly add in oil here because we haven't covered it in a couple of videos. At the moment, oil is still on the negative side. This actually is the only one that's held up with that very nice rejection candle. You get a second rejection here, and oil at the moment looking towards that 58 a barrel. If you're going to go towards the buy side, 64 plus a barrel. Up until then, it's going to be very, very speculative each way. Google, another day, another kind of flat session around these rejection wicks. Obviously, we're still bullish on Google from a fundamental space and the 2050 cross, etc. But that's one of the more interesting mag stocks at this stage. And HSI, the Chinese markets, trying to recover a little bit, but still in chop. So basically, you can see here that they're just sitting around, supported around 23,000, resistances, somewhere between 23.5, 23.6 at this stage. US 2K failed to hold above. This was one we were looking at. If you actually go to IWM, which is the main exchange traded fund code, you'll notice that we didn't close above. But I think that anyone can see this as an inverse head and shoulders, at least from the technical patterns. And the 210 is, of course, a big level to watch. Then the 230 as the resistance after that. So could there be a big equilibrium flow soon? Yeah, there could be. But again, tariffs coming back on, that's not going to allow that break, at least for now. NASDAQ was the big rejection, as we've already talked about in today's video. That is a big rejection candle. It's pretty nasty. It certainly doesn't look good. I think you've got to realize, yes, the trend is still bullish. And no, this didn't change the trend on the daily or the weekly or any of those things. But certainly it is a rejection from the highs, and it happened to not hold above the cluster. So, again, we don't have that confirmation. Look to the real market, that is the Qs or the NDX, to actually close. And the weekly close will be important, so stay tuned for that. We'll be continuing to watch. Bitcoin liquidated, obviously, that massive position came down to the first level of demand, and it also came down to the daily 20 moving average, which we know has been a pretty respected level in many of the shorts and many of the longs so far. So I would say it's around support at this stage, and certainly at a key level as it liquidates that massive position. And we don't have a change of trend on the smaller timeframes just yet. Ethereum actually held pretty well. So Ethereum started to look like it was breaking out over the last 24 hours, hit into the top of this supply, came back down, still coiling with a series of kind of equal highs and higher lows. So yes, that's a nasty looking candle. But as we say, if it closes above here and the weekly close is strong, the next stop is 3,200 for this particular pair. And it's the same thing for a lot of these alts right now. So it's a catch-22. We don't quite have the full breakout kind of thing that you're looking for that momentum move, but certainly things are on the improve. In terms of data and information for the rest of the week, as you guys can see here, there are a couple of bank holidays coming in throughout the next session on. In terms of what's going on right now in the markets, as you guys know, the big thing here has always been the tariffs. That will continue to be a storyline throughout the weekend, and I'm sure we're going to get more information. But I think the big thing to cover has been semiconductors are living up to the expectations on both the forward guidance and the current guidance. And you have to look at that as being a positive, at least for now, that we look at pullbacks generally being met by bull demand based on all breadth thrust concepts that we've talked about here over the last month and a half. And in general, of course, the markets are going to be driven by these narratives. So be careful out there because risk management is everything in 2025. If you enjoyed today's video, then please remember to subscribe and smash that like button. And obviously, big thank you to the sponsor of today's video. They've won a lot of awards recently, and they're doing it because they're constantly listening to us and our feedback. So thanks so much, guys, and we'll see you in the next one. Bye for now.